I think everyone probably should be concerned about this one, which is immigration.
Rent's the big one, because like if a bag of chips costs $10 at Coles, I won't buy a bag of chips that week. But if my rent is $50 to $100 a week more expensive, like that hits me hard.
So for every 2.3 people, you need a dwelling.
Yeah.
A new dwelling. We're not building that.
Welcome to Property Now, where our goal is to make you the property expert of your group chat. Today we're talking about the RBA keeping rates on hold in March. Let's go. I've got to say, what an honour it is to be recording a podcast with TikTok's third most famous mortgage broker.
I don't think that's actually true, man.
Nah, 100% it's true, man. You get 1,000 followers in like 40 minutes, like half a day. Like, it's been incredible. We've got to unpack the secrets one day.
I'm just turning off my Wi-Fi.
Do you know who the first like number one and number two are?
Followers?
Top mortgage brokers on TikTok. Because you're third.
Oh, mate, definitely Robbo.
Robbo's number one.
100%.
Robbo is the pinnacle of mortgage broking for TikTok.
Yeah, totally.
But you're saying he's not an actual mortgage broker?
No, he's not.
Right.
Yeah. So basically, he's sending his customer or sending the inquiries to mortgage brokers that he works with.
Yeah.
Yeah. So I think the story is that he started out as a mortgage broker, but then he got too much traction on TikTok and getting too many leads and inquiries and so forth. Then he realized that, you know what, maybe I think he's working on what he's really good at.
Yeah. What a beast, man.
Yeah.
I love his message.
His content is
so
good.
Very good content.
Yeah. Very entertaining. It's at the same time very educational.
So you chasing Robbo? Or like, because I reckon Robbo's number one. I reckon
Jason chases nobody.
Q's number two.
Thanks, Chris. Hey, that's mate.
Do you reckon Q's number two?
Oh, Q's pretty good.
Yeah.
Yeah, Q's probably number two.
I reckon you can beat Q. I reckon like you're number three. I reckon you got.
There's something about Mr. Calito though. It's like
Mr. Calito.
It's mysterious.
But I think there's enough opportunities, right?
Oh, so you're saying there's enough TikTok mortgage broking niche for everyone?
100%. 100%.
Yeah, but are people following Robbo, Q, and Mr. Calito?
I don't know, man. But
Is
I
that
just
too
take
much? Like, how much
advice,
can you
right?
take?
Just be myself and see what happens.
Always be yourself.
100%.
You know, because you make people love you. So
I appreciate that. Oh man,
I thought you were going to say something profound there.
Yeah.
I was really trying to think of something. I was trying to think of something profound, but today's discussion is going to be hopefully profound. It's the topic is an obvious one. It's been 6 weeks since the last RBA meeting. They had their March meeting, and the RBA have left rates at 4.35%. We're going to unpack our thoughts. What does this mean for the property market as well? We're going to look back at our comments from 6 weeks ago. Have the views changed? And I think some of our views may have changed, so that's going to be interesting. But first, let's actually break down the announcement and the media call. Chris, you've like done some research, so I'm going to start with you. What can we break down?
Yeah, so I've got. I obviously love the data side of things, and it is the rates are unchanged. Michelle Bullock left, and the board left rates unchanged at 4.35%. What's really interesting is the new structure that the board is taking. So it's every 6 weeks. We've now got, instead of every first week of every Tuesday,
every month,
the first Tuesday of every week, every month. Sorry,
the first week of every Tuesday.
Cut a page. Let me start that again.
Everything falls apart without Zara. Come back next week, Zara. This is great.
Yeah, so the new structure, every 6 weeks, there's an announcement being made. But they also followed it up with a press conference. And it's a really interesting feature that they're doing, where the media gets to ask some questions and probably asking the questions that the everyday person would ask. And we now get those insights into what the board decision is.
Yep.
And they are concerned. There was some wording changed on the policy. So, that wording, it went from, in March, they considered increasing interest rates, and it changed in the last statement to say they would not rule out anything. So, not rule anything in or out. As if to say, we're not going to say it's going up, we're not going to say it's going down. We're assessing the data as and when it comes to light, which I think is a very sensible approach. And they'll change their opinions based off the data that's coming into play. I think we've all talked about this, where the RBA has had a history of saying, back in 2022, rates aren't going to go up until 2024. Yep. And here we are, 13 rate rises, and they've gone up consecutively.
Yeah, I actually love the language because, like you just said, what they say is so important for household and like everyday Australian sentiment, right? So everyone at the moment is thinking like times are tough, but rates are going to go down.
Yep.
But if they start being like sort of wishy-washy or right in between. Like it could go either way. If people think that rate rise or that rate cut may come later, then it means if the confidence isn't quite there, it means that, the what am I trying to say?
Well, I think it got to a point where it was becoming too important,
Yeah.
and everyone was hanging off every word that the RBA was saying. I think what they've done a great job now is the communication is very simple, it's effective, and I think it's actually being a lot more responsible.
Yep.
They're not coming out saying rates aren't going up for another 2 years or coming down for another 2 years. They're being very responsible with what they're saying. They're leaving the door open, and the reality is how they are wording the statements are. They can increase, they can be on hold, or they can decrease. And I think that's what's really important, that they're leaving the door open for all three options that can be in place. And I think that's actually a highly responsible approach to be taking, and that's in my view. I think that's the best way to approach these situations. And I've always said that you need to look at the data and change your opinions based off the data that's coming through.
Yeah, absolutely. Yeah, because, I mean, how can you actually comment on what's going to happen in the future if you are making decisions based on data and the data's not available? Right. And then you're giving people certainty around what you're predicting, because that's the job of the economists.
Or even giving uncertainty.
Yeah.
And I think that's actually more dangerous, that people are looking at what they're saying and taking that as verbatim. Rates aren't going up until 2024, back in 2022, and they're using that data to make decisions, which is problematic.
The biggest metric is inflation data, right? So we want to see that coming down. The things that they say at these meetings or during these media days, can give people confidence. Oh yeah, the rates are going to go down, so maybe I'm getting into the market, or I can spend more, or I can go on holidays. But if it's a bit more flatline, we don't know when they're going to go down. We don't know if they're going to go down. Then because if people get confident too early, then we can see a bump in inflation, and we don't want to see that.
One really good point that Michelle Bullock made in the press conference was businesses. So to get business confidence, you need to be certain of your costs and expenses.
Yeah.
Now, the inflation is a bigger risk to the economy than rising interest rates.
Yeah.
And how she put it is that if inflation is still out there and it's still high, businesses are effectively paralyzed in decision making, because they're, instead of focusing on looking forward and making projections and actually getting their products and goods and services out, they're too focused on cutting costs and reducing costs and actually pulling back spending, because they're uncertain of, are the costs that are here today going to be my costs that are tomorrow? Are they the same amount? That's the concern with inflation. So the priority is definitely on bringing inflation down, which is the increase in interest rates that we've had. But it's probably really interesting to note on the home buyer front and whatever, the everyday Australian, it's clear that there's competing interests, right, that people have. I mean, if you're an elderly couple and you've got a high amount in savings, you probably don't want those interest rates to come down, right? You want the interest rates to be higher. But if you're someone with an existing homeowner with a mortgage, you're probably pretty happy for the rates to come down. So there's competing interests there. But if you're a prospective home buyer, and Jace, you probably might think about this more as well, it's probably likely that you probably want rates to stay where they are, so you're probably thinking if rates drop, property prices are going to shoot back up, or shoot up even further. That's probably what you might be thinking as a first-time buyer. So there's varying and competing interests that everyone has with interest rates, and I think it's really interesting to look at that component.
100%. What you're saying about the behavioural change of businesses as well, you're seeing that in households.
Yeah.
So some of the data that's come out, like household saving is actually up to 3.2%. Which is the first time it's been up since COVID. Travel spending is down 9%, right? So people aren't obviously... So what that basically means is people are tightening the purse strings on things that they can control. So we can't control insurance prices going up. We can't control electricity prices going up, or petrol prices going up, or the bag of chips at the supermarket prices going up. But the things we can control, we are tightening those purse strings. So people see the pain. They're not out there spending willy-nilly. This goes to households. It's businesses, as you've just said as well. So the sentiment has really changed. It has really changed out there.
So booking that holiday may not be a priority right now.
Well, I can control not going on that holiday.
Yep.
I can't control if my electricity bill goes up. So what we can control, we're doing that. So we know there is a need to tighten purse strings. That every household knows, every business knows. Sentiment has definitely changed.
It's interesting to hear the household side, because going back to the business component and the way where businesses are looking at their spending, particularly on the property element and the property development space. We all know there's a housing supply crisis or a shortage. But if you're a developer looking to get your project out of the ground, inflation is a really important metric to be looking at, because it doesn't take 10 minutes to build a project. It takes 6, 12, 18, 24 months sometimes to get a project complete. And you're subjected to inflation during that period, and the cost of material and labour. If that goes up during the construction period, which has happened, that's a real
we've seen so many
feasibility.
we've seen so many builders go bust in the last 12 months because of that very reason. And
that's the concern. That's where the RBA is looking to bring down inflation, and it is coming down. It's at 4.1, the last December quarter reading.
Yep.
We're going to get another reading coming out. But there are other factors that have changed in the last 6 weeks as well.
Well, let's go through that. I know you've got those numbers in front of you, so let's unpack.
Well, there's 5 key things that I think we need to look at for what's changed in the last 6 weeks. And one of them is a new one, which is the price of iron ore. And we might be thinking, what's that got to do with property? But we'll get to that. But the price of iron ore has dropped circa 20 to 25% since its highs 6 weeks ago.
Yep.
Now, that's an extremely important point, because federal government revenue in particular is tied very heavily to our number one export, or could be number 2 at the moment, but number 1 or 2 export being iron ore. And that's with the slowdown in China as well, that iron ore exports are heavily tied to the budget. And that's a big problem if iron ore prices start to come down, which they have. Right. It's a hit to the economic budget. So that's a concern. That's something to watch, and it's important for property. I mean, in particular areas like Western Australia. And we're known by no means we're at a crisis point at all with iron ore. But if that continues to drop and it causes mines to shut down or whatnot, that could be an interesting point.
It could affect property in some areas.
It definitely will affect properties. And I think so. That's iron ore. It's not anything to be alarmed about by now, but it's definitely an indicator to watch. So something to watch.
Yep.
Oil. On the flip, I'm always talking about oil, but on the flip side, oil is a really important indicator of inflation. And in the last 3 months, oil has gone up 15 to 20%.
Yeah.
Since its lows. So, you're probably seeing that. That's on the actual spot price, but you might be feeling that at the Bowser directly.
100%. You're seeing this figure. You know people who know people. You know the figures. But I'm the man on the street. When I drive past the petrol station, I have a look. Okay, hold on. It's pretty expensive at the moment. So the last couple of weeks, it's been probably 40 to 50 cents more expensive than normal. So that affects everyone. We all need petrol.
So are you saying when the oil price goes up, right? Is inflation going to go up, or
I think there's going to definitely be some areas of inflation that are going to tick up because of the price of oil. That's increasing.
Oil affects everyone: households, businesses, transport. Like it's such a big.
So
part
isn't
of
inflation sort of gradually coming down at the moment?
At the moment, so the reading that we had coming down, the last reading was at the December quarter.
Yeah.
So that was for the 12 months up until December 2023, and that was sitting at 4.1%. There's been some monthly indicators that have come out since the December quarter that's shown it coming down.
Right.
But we're going to get a monthly reading coming out, I think, in April.
Right.
For the March quarter. So the 12 months till March.
Right. So what you're saying is that because of the price of oil going up, there could be a possibility that the next month's inflation number might go up a little bit as a result of
it. Well, there'll be components of the inflation numbers that are coming up, but then there might be other things like insurance or travel that's coming down. So there may be a net offset there.
Yeah.
But oil peaked in terms of the bottom of oil prices in December 2023.
That's interesting.
Which is the last reading. So we've got 3 months now of oil rising 15 to 20%. That won't be felt until the April reading. So it'll be really interesting to see the impact on inflation of oil.
So inflation numbers at the moment, you said 4.1%?
4.1 for the 12 months to December 2023.
They're trying to get it between 2 and 3,
correct?
Right? So you're saying there's a chance it could move up next month?
Well,
or it should
I'm
slower?
not predicting where it's going to go, but what I'm saying is I think oil is an indicator, a leading indicator to me of inflation.
Yeah.
And in the last 3 months, it's ticked up and up and up and up. So, and that's about 15 to 20% up since its lows in December. So that's, I think, something definitely to keep an eye on in the April reading for inflation. Oil affects everything.
Yeah. And I guess in relation to property, if that inflation number slows down in going down, then it means that it's going to be longer before we see an interest rate cut.
Yeah.
Right?
Absolutely.
Yeah. Okay.
That's right.
All right. What else are we seeing? This
So,
is interesting.
Talking on the inflation side of things, so again, to December 2023, it's sitting at 4.1. We had monthly indicators well below this at 3.4% since, I think, in February, that indicator. But again, I would say the oil component is a big factor for this inflation number. So I'm very keen to see the next reading to see what's coming out. And that's going to come out before the next meeting in May for the RBA. And I think they're going to definitely be looking at that. But the fourth one, which was touched on by Michelle Bullock in the press conference, is unemployment.
Yep.
Now, we saw a tick up in unemployment rate to 4.1%.
Yep.
New data is going to come out today at 11:30 as we're doing this, so we don't know the new data at the moment, but that's currently at 4.1%. We're seeing a slowdown in employment or new job creation. Where Michelle Bullock was talking about the unemployment numbers, if we start to see that head to that 4.5%, I don't want to say regardless of where the inflation number is, but I think if that gets to 4.5%, we're going to start to see some real discussions about interest rate cuts.
If this conversation is interesting to you and you're interested into getting into property in a completely new way, then check out coposit.com.au. That's coposit.com.au. Last time we spoke about this 6 weeks ago, you said, this is a quote, if we go to 4.5% unemployment, we will see rates drop.
Yep.
So you're still, your opinion is unchanged on that.
I mean, Michelle Bullock was saying that they think it's going to peak at 4.2, 4.3%.
Yep.
I do think we're going to get to that 4.5%, purely because of point number 5 as well, which is not going to help, which I'll get to. But what we're seeing is jobs being created, so the unemployment rate is ticking up, and it's not new unemployment. So we're not having companies sacking people.
Right.
We're seeing that there's a natural unemployment rate by the addition of population. So that's what they're saying.
Right.
And that's where 0.5, and this is a really surprising, and I think everyone probably should be concerned about this one, which is immigration. We had net arrivals. So this is the amount of people coming in, amount of people leaving, net arrivals in January alone in Australia of 55,000 people. And this is long term.
Yeah, right.
Long term is classified as they're staying here for more than 12 months. 55,000 in the 1 month.
And which capital cities are most of these?
Oh, look, they're going, they're spread out, but primarily New South Wales.
Right.
Like, we're seeing that primarily New South Wales. But I mean, 55,000, like, no wonder why there is a rental crisis.
Yeah.
Because if they're not coming here to buy, which they may not be, chances are they're not, they're looking at rentals.
Yeah.
And if you're staying here for more than 12 months, it's probably pretty likely you're not staying in an Airbnb or a hotel for that long. You're renting a property.
Yeah.
So I think it's madness, to be honest, to have that many people coming in at the moment when we're in a housing crisis. I think it's, and I know the government has talked about reducing these numbers, but that's not reflected in the January figures. And we're talking January 2024 here, 55,000 people on a long-term basis. I think it's actually outrageous.
It clouds any economic growth we have, right? Because if you look at economically as a country, things have gone up by 0.2%, right? Which is, it sounds great on the surface, things are going up. It's a very small number, but when you're adding that many people, that 0.2%, it means that individually we've shrunk financially.
Yep.
So the country as a whole has grown by 0.2%, but that could be reflected by all the extra people. So it's like you have, if we all go out for pizza, there's 3 of us, we get 1 pizza, there's 8 slices. It's always food with me.
You love pizza.
There's 8 slices, we all get, 2 and a bit slices each, right? But all of a sudden, if PJ comes along with us as well, we then get 2 slices each. Yep. That 2 and a bit becomes 2 slices. We're going to have to get an extra pizza.
It's just sucking up the available supply. And that's why rental vacancies are where they are across the country. Because people need places to live, and we're just not. So number one, we're not adding the housing stock at that rate. So you roughly need, they call it 2.3. So for every 2.3 people, you need a dwelling. Yeah. A new dwelling. We're not building that. We're not even close to that. So, but we just keep adding to the problem. In my view,
yeah. On that 2.3, I saw a graph. I can't recall the report. I think it was CoreLogic or something. I think they built. At the moment, the dwelling to people ratio is like 1 dwelling per 4.5.
I think it was 4.5. I saw
4.5.
that as well.
Yeah. Yep. 1 property now is 4.5 people.
Yeah.
So it used to be 1 to 2 point something people.
Yeah.
So that's a massive issue.
We've got a huge problem, and we're adding to it. We're not even adding to it. We're compounding it because we're not building as fast. So that's the issue that we're trying to address. But then we're just throwing this. And mate, I don't blame people. Again, I say this every episode. I don't blame people for wanting to come here. It is the best country in the world. But we just need to pause for a second and really try and address this problem that we have, which is the housing supply issue.
We need to house the people that are here.
Yeah, absolutely.
Before we can add people.
I agree. I think we need to prioritise the Australians that are here first to make sure that they have housing, adequate housing, whether it's rental, whether it's ownership. We need to make sure they have adequate housing before adding to the problem.
So have those immigration numbers gone up, or are they coming down, or like what's the story
there's
there?
the target. I mean, last year, I remember the episode that we did was roughly 700,000 that came in last year.
Yeah.
And they wanted to bring that back down in line with historical norms, which is about 250 to 300.
Yeah.
Well, I mean, 55,000 in January alone.
1 month, yeah.
You're at the 700,000 number annualized again, which is a huge problem.
Yeah.
We're adding to that problem, and I believe we just ticked over 27 million people population in Australia.
Yeah, wow.
So those 5 points.
That's a lot to unpack, right?
Yeah.
So Jason and I are just sitting here going, far out. Okay.
It's really good to kind of get that overview, isn't it?
Yeah.
It's to see the bigger picture, to see all of these things make a difference. It's not just one thing. It's not just you spending money eating out. It's not just one item or interest rates on your home loan and stuff like that.
That's right.
All these different factors contribute to the situation it is today.
And of course, this is the Property Now podcast, not the Iron Ore podcast or the Migration podcast.
Yeah.
So how do all these numbers and figures, how does all this information now relate back to property? How is all of this going to affect the property market moving forward?
Well, look, talking on the inflation number, right, and how will it affect? Like, if we've got migration coming in, one of the factors of inflation is rents. Going up and how fast they're going up. If we have that, if that vacancy rate goes from what is it currently, 0.7, 0.8, 0.9 in some locations, if that drops another point, which is just borderline impossible, if that goes to 0.5, that's going to drive rent prices up even further. And that's going to drive inflation, and that will mean that there's no rate cuts, for example, because inflation's going up even further. So what does it mean for property? I mean, the iron ore one is an interesting one. What does that mean for Western Australia? We're not at that point yet. But generally for property, I think we're going to continue to have this housing crisis and this rental demand crisis.
Yeah, absolutely. Because I think you're actually going to see some serious issues around, like they've got homeless issues now.
Yeah.
So with what you're talking about, Chris, in terms of vacancy rates continually to drop, more people coming in. Some of these videos I see online from the news when people are queuing 50, 100 people looking at one rental property. I used to think, that's probably just one.
Yeah, it's
one
in a city location,
situation, right? But I'm seeing stories where people have their rent increased by $100, $200, and they can't afford it, but then they can't find alternative accommodation because there's so much demand. Like they're literally facing homelessness. Especially the fringes of society. Let's say the single parents out there. The people on the lower socioeconomic situation. Yeah, like what are you going to do?
The gaps between the haves and the have-nots is widening. So you mentioned earlier, in terms of interest rates, your boomer cohorts, they love interest rates being high because they got cash in the bank, they're earning interest, right?
They own their property outright.
Yeah, they own their property outright. They're not concerned, And the same thing's happening here. Like if you're an investor, you own a few properties, rents go up, happy days.
Yeah.
But if you're trying to get into the market, if you're renting and you're trying to save a deposit at the same time to get your first property, it's becoming very difficult, if not impossible.
Yeah, 100%. Because it's harder for you to save a deposit because everything costs more.
Yep.
Even without the rent, the cost of living is a lot more than a couple of years ago. Right. So talking about the price of oil going up, your petrol cost is going up, and people living out far away from the city right now, renting, spending a lot of money on tolls, spending a lot of money on petrol.
But rent's the big one.
Don't get me started on tolls.
But tolls is capped at $60 in Sydney now, right? But anyway,
don't get
we won't get you
started.
started.
That's another whole episode.
But rent's the big one because, if a bag of chips costs $10 at Coles, I won't buy a bag of chips that week. If petrol's a little bit higher, I might fill up a little bit less, and then when it goes down, I'll fill up a little bit more. So you can sort of navigate those things. But if my rent is $50 to $100 a week more expensive, like that hits me hard.
Yep.
You know, so that's really it's actually impacting the property market in a big way.
Yeah, absolutely. And I think if inflation continue to go up, the interest rates aren't going to come down. So it makes it even harder for someone who's renting to buy a property, because when they look at the repayments, right, plus all the additional costs of owning a property, let's say if you're buying a unit, an apartment, which is usually more affordable for a first home buyer,
Yep.
then you got to pay your strata levies,
Yep.
you got to pay your council rate, you got to pay your water rates. In addition, you got to pay your repayment. Right. So from a cash flow perspective, you're going to be needing to spend more money to own a property, assuming that you can get a loan, you've got the deposit you need. So I think now there's a bit of a dilemma, right? So it's not so clear cut. Owning a property is better than renting, right? So I think that's the challenge as well, right? So it's, the people that are renting, even if they can own a property or buy a property, it can potentially be more expensive to have one.
Yeah.
Right.
It's how do we solve this problem? Like, it's just huge. It looks very bleak, doesn't
I
it?
think actually one really simple thing that they need to look at desperately right now, which is look at the immigration numbers, and they just need to bring it right down. I think that we need to stop adding fuel to the fire. And again, I used the example of the dam a while back, but like, it's still raining on that side of the dam, and it's at 100% at the moment. We need to stop adding water, otherwise it's gonna flood downstream. I think that's a huge problem, where immigration is something that can really address housing right now, and particularly on the rental side. We need to look at that and potentially reduce it.
Look, I agree. Look, I'm for a big Australia. We've said this before. Like, I want to see as many people as we can have here, because it's such a great country. But we just need to figure out how to get there if that's where we want to go. And at the moment, it's just unsustainable.
They've got to find the balance. And again, Australia has been built on immigration, right? But we need to look at points of immigration and know when to tone it down a bit. I think now we're at that point where we really do need to tone it down in terms of the immigration side of things, and how many people we're allowing to come in right now, until we almost need a stopgap just to fill this void that we've got on the rental side of things. Otherwise, we will head into a homelessness crisis if we're not already in one.
Taking it back to the RBA, because the RBA are not the government. The RBA can't make decisions when it comes to migration, when it comes to things like that. So I guess, are you saying, like, what are they doing the right things at the moment by holding interest rates? That's really the only lever they can pull. Interest rates up, interest rates down, interest rates paused.
Yep.
Are they doing the right thing right now?
Yeah, I think so. Yeah, I think they're communicating the message well.
Yep.
And I think they're getting the message across. But that the government, I know we can't talk about the government side of things, but the government policies has to match what the monetary policy is. It just does. They have to work hand in hand, and they're not working hand in hand at the moment. So, I mean, if you've got the RBA doing what they need to do on their side, but the government maybe not, then that's going to affect the decisions.
But that's the thing.
RBA
Has it
makes.
ever worked hand in hand? Government just does what government does and says, "Oh, RBA, like, you guys, you have a lever, like, work it out."
Government does whatever popular and what's going to get them re-elected.
Yeah,
that's
absolutely.
just the truth, right? They do whatever is popular to get them re-elected.
Is migration popular? Is that huge migration number? Is that popularity?
Well, it might be popular for some businesses
Yeah.
that they are funded by or receive donations from.
Yeah.
That might be popular for those groups. But in terms of, is migration popular? Yeah, I think adding to the population, I mean, it depends where you sit on the fence on that, right?
Yeah.
I am for a big Australia, and I am for migration coming in. But I'm not for creating problems for existing Australians. So if we're bringing people in, great. But if bringing people in causes hardship or financial hardship, and potentially not having a roof over someone's head in Australia, I'm not for that at all.
It's actually interesting you say when it comes to popularity, just thinking out loud, because when we think about stopping migration, what do you think about when it comes to politics, right? You think about Pauline Hanson. You think about Clive
You think
Palmer.
about the boats.
You think about stop the boats.
You have this image, right?
So there's this negativity about, like, stopping migration. So maybe you could be right. You could be really onto something there, so...
That's one thing that they could do.
Yeah.
Like, that's one
But could that be the reason why negative gearing and capital gains discounts are more in the target, right, from, let's say, the Greens or whoever, and the people that are trying to campaign to resolve the housing crisis, but there isn't as much noise in regards to migration? I know there's articles written about it and so forth, but if I think about what the Greens are proposing, they're mainly focused on getting rid of negative gearing. Like, the target is the investor. Yeah. So it's as if the investor is the problem, causing, or that's creating the housing crisis. But there's no mention of you need to stop migration, look after the people currently, maintain the supply because you're not building any more. So you shouldn't let more people in. That's going to create more demand.
Well, that's right. And the Greens are talking about as well. This is probably a topic for another day, but a not-for-profit government-run builder, developer that can help out. So they're thinking about how do we get more supply.
Yeah, but that's a long-term solution, right? So
that's right.
So what Chris is talking about, that capping migration or just stopping the migration for now, so you let the
supply catch up.
Correct, right?
We don't need that much more supply.
That's something that you could
people.
do potentially right away. But in terms of creating more supply, and we've had this conversation
takes
offline
ages
as well,
it
takes a lot of time. You have to build it. It's not as if it's a quick fix. So I think there's a short-term solution and a long-term solution.
Well, I think the pause, and I'm actually not saying stop. I think there's got to be a reduction in the numbers of immigration. They can never stop, but there's going to have to be some reduction in the numbers and a stopgap, because that's a short-term solution. That would be a short-term solution that would help initially, whilst we get the long-term solution being getting more housing out of the ground, getting supply coming into market, actually happening. So that's something that government could look at to help on the rental crisis, particularly on the rental side of things. Not so much home ownership, on the rental side of things. And you're seeing rising rents. That will stop the rising rents.
I wonder if like Michelle Bullock and RBA can be saying things like this, like we need this kind of thing from government. So it just pushes that discussion into just out in the world, out in the media. Like,
well, the government does that to the RBA.
That's what I mean.
Because I remember Jim Chalmers talking about the RBA shouldn't increase rates.
And then they raise rates.
Right, this and that, right? Well, we wouldn't like to see another rate increase. It's putting pressure on Australian families.
So maybe we need to see it go the other way.
So they're trying to imply, right?
You're shaking your head.
I don't know if the mandate is there on that. And look, what happens behind closed doors happens, but
air it out. Air out your laundry in the public, I say.
Spill the tea.
Spill the tea.
We need to know.
I don't think that's going to happen, but I think there needs to be better collaboration for sure.
So last time we spoke about this 6 weeks ago. So rates were on pause in March, January.
March.
No, March. Where are we now?
We're in March.
We're in March now. Now they're on pause again in March. We said 6 weeks ago. And all the talk in that episode, go back and listen to it if you haven't already. It's actually our most watched and listened to episode of all time. So add to those numbers, guys. Let's do this. But we said, Chris, you said rate cuts could come sooner rather than later. I said there is potential for a rate cut between May and September. You agreed, Chris. And that was really what we spoke about. We were telling people 6 weeks ago, get ready, get your shit in order, so that if there is an opportunity to buy property, there may be a rate reduction soon, so just be ready for that, so that you can be first mover. Do we still feel that way? I'm going to ask you, Jason, first, because Chris, you and I have done a lot of talking. Jace, do we still feel like rate cuts could come sooner rather than later, based on the pause and the discussion in March?
Oh, look, really hard to say. Really hard to say, and I think my opinion changes as well as I see the data come out too.
It should,
right?
yeah.
So I think at this stage it's probably going to come later.
Yep.
Towards the later end of the year.
Yep.
There's also speculation that it won't even happen this year.
Yep.
Could happen early next year. Reading some of the information around the CBA economists talking about that rates could go down as the official cash rate could drop as low as like 2.85% or something like that. That's pretty crazy.
Mm-hmm.
It's definitely great relief. It's going to do a lot for borrowing capacity. But then goes back to what Chris often talks about. It's going to apply to everybody, right? So what's that going to do to the property market? But in terms of getting your stuff ready, I'm always an advocate of sorting that out ASAP. Regardless of what the rate situation is, because you can't control that. But you can control having a conversation with a mortgage broker, understand where you are today, right? Whether it's a good idea to get pre-approved so you're ready to buy right now, right, before there's any potential major movement in property prices. If you're not ready, what do you need to do? Where's the target? Where's the goalpost? Do you need more savings? Do you need more income? Do you need to pay off a debt? So you're ready to, when you can do something, because that's what you can control.
Yeah.
Do you agree?
Oh, look, I think the whole planning, always be ready. That That should always be, whether
course.
rates are coming up or down, that be ready. You should always be ready to pounce on an opportunity. So that be ready thoughts should always be there. In terms of when rates are happening, I do think there's going to be pushed back to the later half of this year, if at all, as Jason's saying. I mean, I would have loved to have done this in 2 hours after the employment data has come out, because I think that's going to be really critical to see. If we start to see, and we'll see this in the next few weeks, if we start to see employment data head up 4.3, 4.4, 4.5% unemployment rate, rates are going to come down sooner. But we need to see the inflation continue to come down, and that reading is coming out in April. I think the next meeting in May, we're really going to have a clear indication of if rates are going to come down following that meeting. I don't think there's not going to be a rate cut in May. I'm going to call that now. But I think there'll be a very clear indication of where rates are heading after that May meeting, because I don't think we have a clear indication right now from where the statement is and from that press conference. But I think May, we will have a clear answer as to what the next movement and how close that next movement is.
Sounds like our chat in 6 weeks is going to be fun. I think last time the expectation has always been around this September. So everyone's thinking, okay, rates might drop by September. That has been the sentiment out there in the real world. From last discussion, everyone was starting to say, okay, maybe they could move in May, maybe. But now we're sort of saying they definitely won't. And I actually do agree with that. I think the RBA is being very clever right now. So like I said earlier, or hinted at earlier, consumer sentiment is positive that rates will go down as a next movement. I don't think anyone thinks rates are going to go up next, but everyone thinks they're going to go down. The question is when. But if people get too confident too early, we can see inflation go the wrong way, because we get confident, we start buying again. You know, we get comfortable. Oh yeah, rates are going to go down. Don't worry about it. I think the RBA needs to be very clever in suggesting that, hey, maybe rates are just not going to move at all this year. We might go through the whole year where rates do not move. And when they do move, it probably will be down, but it needs to come as a real shock to the general public that rates have gone down. So we get to September, maybe they go down and everyone goes, oh, I didn't expect that. I kind of think that's how they need to play this, and that's where their language needs to go. I'm not saying pull the wool over the eyes, but, you know, if we can't have people getting too confident with spending again, because it's going to get us moving in the wrong direction.
Yeah, that's exactly right. And like, what do you guys think in terms of the previous years prior to the rate increase, that they managed to keep inflation quite flat in between the 2 to 3% range that they're happy with? You know, that's different to what we're seeing today. That's in the economy.
Yeah, it is different. I mean, the 2 to 3% range, that's their target. It's not the only mandate that they have. The unemployment side of things is the second. So I think it'll probably be in that range as expected. So back half of this year, I think it's going to happen sooner than they think. Not 2025. It will happen this year, I believe, into that range. But I think the one part about the confidence side of things, if everyone is expecting a rate cut as well, how much of that is already priced into the market?
That's what I'm saying.
Yeah.
That's exactly what I'm saying. Because we've seen, in terms of the property market, you know, sales have been up across the board slightly, you know, in most states and territories, not all of them, but most. So, and that has been since the last discussion. So are people starting to say, hey, okay, I'm going to move. I'm going to make the move because, you know, rates are going to go down. Yeah. That's actually very dangerous, you know, for the RBA and for the inflation story. So it's going to be interesting to watch. And that's why, you know, going back to what you said right at the start, Chris, the narrative that the RBA and Michelle Bullock are sort of running with is actually good, because it's very responsible. It's keeping us guessing. Yeah. Responsible is the right word. Intentional might also be. You know, so we don't ever want to be in a position where the RBA are saying, yep, rates are going to keep drop. They're not going to go up until 2024. We don't ever want to be in that situation again.
But imagine if, on the flip side, right? Imagine if they came out and said rates are going to drop in 2025.
Yeah.
And they're going to drop significantly.
Yeah.
People would be making decisions on the...
There would be parties on the streets.
FOMO will be back.
Yeah, right. Exactly.
Yeah, 100%.
So, and that's the last thing we can have. So I'm kind of comfortable with the responsible take. Like I want us to believe that, hey, you know, maybe things aren't going to get better sooner.
Yep.
Because that's what's actually going to make things get better sooner in a funny kind of way.
I agree. And I'm super impressed with how she's handling compared to Phil Lowe, which was fine. But I'm super impressed with Michelle Bullock and how she's actually handling the press conference side of things. She's answering the questions in a really, again, I have that word responsible, in a very responsible way, not giving false hope, but not giving false information, of course. But that's what I really like to see. So I think great to see that side of things from my perspective.
We should set a goal because we've been talking about, do we eventually get guests on this podcast? Let's get Michelle Bullock on the podcast.
Why not?
That's the goal. Let's get out there, Jason. Maybe with your huge TikTok following, we've got a bit more clout now.
Let me just check to see if she's already following or not.
Yeah, if anyone's
It's probably a fake page, bro.
Michelle Bullock,
Thanks,
if you're not following Mr. Khalito on TikTok like the rest of Australia is lately, like it's just going insane. Do that. If you're not following Property Now on our channels on YouTube, on Instagram, on TikTok, on everything, please do. Please hit subscribe. It's really important so that our message keeps getting out there. We love having conversations with you guys. So please do that, because I think that's a great place to end. We'll have this discussion again, I'm sure, in 6 weeks.
100%.
I'm sure Chris will have the juicy data, and maybe our opinions will change once again. But until next week, hopefully Zaz will be back in this chair so that I can be sitting with you guys. But that's been another episode of Property Now.
The Property Now podcast offers opinions on Australian property news for informational and entertainment purposes only, and they are general in nature. It does not take into account your objectives, financial situation, or needs. It does not constitute professional advice. Always seek expert guidance before making any property-related decisions.